Chart should be up now. Do you see them? Let's see. Yeah, okay, cool. Yeah, there's something technically going on here with Zoom that anyway, later. So, markets get a little crazy here. I don't have the TV on, so I assume maybe this is a jobs report that whatever it said, markets spiked to the upside. And so the S&Ps are taking out resistance here. And as you can see on the weekly chart, there's nothing to stop them from going higher at this point because of the way they started on the way down. It doesn't mean they have to go up there, and it doesn't mean that they have to go straight up. And so, we have multiple concepts as part of the master trader method, right? And so obviously one is a trend. Is it trending, making higher highs and higher lows? What's a high and what's a low? Pivot's a high and a pivot's a low. And it's pretty simple. What's to the left? Is there resistance there or not? Or not? Yes, right? Yesterday we spoke about that swing high, market stall there. And now they're pushing up above and into the void. So what could possibly stop them from just accelerating up another 200 points? Well, another market affecting this one. That's why we keep an eye on multiple markets. You can see maybe this is like just short covering going on here now, or just as ranges begin to expand, the way that we read the psychology of that is to say caution is being thrown to the wind now, whereas the hesitancy on the way up, where prices move up and immediately pull back again, up, immediately pull back again. Little more bullish here. We talked about this sideways consolidation at resistance, the bottoming tail bar, the buyers on the dip, and on the little consolidation. And now as prices begin to accelerate, or the ranges begin to expand, which is much clearer to see here on the shorter time frames, how prices are just now accelerating higher, leaving voids below. A little pullback there, but and not a little concept, this little consolidation, you see these overlapping opens and closes. So when you're looking at a higher time frame, you don't see little bases, but if you recognize the overlapping opens and closes, you'll know that that's where there's going to be some support. So at this point, we see that there's really nothing to stop the S&Ps from going up. So we look to other markets like the NASDAQ, which we know is up near resistance. Look at the weekly chart. And while these are spiking higher now, right, they were going down, and it's just an inside bar so far. Now, we could perceive that because this is underperforming now, that is what's going to drag those S&Ps lower, maybe. But as we do every day, and we can have ideas, but do we have facts? Meaning to say, in our systematic way, does it at least, at a minimum, break a prior day's low? And while that happened yesterday, there was that recovery, and now we have a new prior day's low, the yellow line, and an inside day. So far, as it's coming up to the top of that resistance area, we'll see how this reacts. So in a smaller time frame, it's very easy to get caught up in what's happening there, which seems like wow. And you look at the higher time frames, and this one, say, wow, that's a pretty big bar, of course. And when you look at the daily, and it's just an inside day, and the 60 minutes just chop up and down. Nonetheless, that has been underperforming a bit, and the S&Ps are running higher with nothing to stop them. So we'll keep an eye to see at the open, there'll be a tick extreme. So that to some extent has to be ignored. And so we'll just have to see how this unfolds as far as if it does come back in, or whether it's just going to run higher. So 3,200, while there's nothing to the left, that whole number is likely to come into play. It's relatively close, so keep an eye on that. As far as SPX levels and spreads, I'm not so sure. We would have to see some type of a breakout failure, some kind of bearish pattern on the 5 or the 15-minute chart to consider the call side, which at this point, just because of the fact that it's accelerating higher, those call options are going to pop, meaning the premium in there is going to be large, and that's attractive. But to grab that money may not be so easy, meaning is this actually going to stop? So you don't just, my point of view, you don't just sell something because there's money there without some indication or signal of weakness. And as you can see on the 5-minute chart, there is zero so far. Right? The fact that this is starting out without taking out the prior bar's high immediately doesn't mean much of anything. The bar just started. There's 4 minutes to go. It could accelerate higher, so we wait. Now, the put side of SPX probably, I mean, I don't know, we'll look, but I'm thinking probably there isn't going to be much premium there. And what if this collapses? So I'd rather stay away from the put side unless, there's like some gift down below here or down in this area. Because if this was to top out today, let's just assume that the cues top out and start coming in, or for whatever reason, the markets just get cold feet on a Friday and all of a sudden things start to collapse. And, going under today's low, which might be where the premium is, may not look so attractive if this market does start to drop. So I'm not so sure about the SPX levels going into today. As to where the safe zone is. At 3120. I don't think so. I don't think so. I don't even know. These things don't update during the pre-market, so I assume it's up above this level here. So I think 3120 would be way too tight, but at the open we'll get a much better view as to what's going on. But initially I would say below here. But I don't know if there's going to be any premium. We'll have to check that out. All right. YM up 700 points. Jeez. Is this on a celebration of protesting? And this must be about the fact that the virus issue is a non-event. It has to be, because when you see thousands of people that are being allowed to buddy up next to each other, there can't be any concerns. Dan's asking me about the SPY thing. Hey, at the open, right, what do you get into a bad trade, which you don't perceive as a bad trade? Yesterday was weak. What do? You wait 5 minutes. You wait 15 minutes. You wait to see if this gap up is going to bring in the sellers. Right? You don't react in the moment to the emotion. And everything's about money management, and credit spreads cut like a razor when you're on the wrong side. That is the downside of them. They're such an attractive instrument as far as creating income, but when one bites you, it's a 200-pound pit bull on your arm. And we'll see. We'll deal with it. See what today is going to bring here. So range expansion bar right into this resistance. It's cleared the 200. It's at the pivot high right there. So we'll just see what happens at the open, whether things start to come in. This type of euphoria could result in an accelerated vertical move to the upside. Granted. but this thing could be a giant gap in crap. So we'll just have to see what happens in the opening minutes. That's all there is to it. Right? So the Russell pushing up with a range expansion bar right up into this resistance area. If you bought on the pullback, which is the professional entry point, and it's gapping up here into resistance, what are you going to do? Anybody with any common sense is going to sell half and then see if there's any more left on this thing. So my expectation is that they'll be selling at the open, give or take, within 5 minutes or so, and then we'll just see how far that goes. And there's a void there, so it could keep going. But there was the pullback and, range expansion signals that you're getting closer to the end and that voids are being created below, and risk on the long side is increasing exponentially when things begin to accelerate. Now, we just don't know how far it'll accelerate, right? It could keep going up. So look, this is, people refer to this as the hard right edge, right? Meaning, can you tell me what the future is today? Sorry, I can tell you what's happening in the moment, right? I can tell you what's happening when the market opens, what's happening on these time frames if momentum is stalling, but we do not have everything in alignment here. Meaning, so this being at resistance and this stalling momentum is the beginning of what could be a turn. Whereas I look at the S&Ps and I see this moving up and there's nothing to the left. But that is why we look at multiple markets and to see, do others begin to falter? Now, amazing, bonds are falling and interest rates are going up. And if you look at, the 5-year beginning to go higher, where is the deal with the Fed controlling interest rates and keeping them low? Maybe all of this is signaling that this coronavirus thing is in our past and everything is good and this is the celebration, and this could be the sell the news, buy the rumor, sell the news. We'll just have to see. But we see interest rates now beginning to push higher, and maybe they continue to do so, but that has to get the interest of the equities market and not necessarily in a positive way. Initially, it could be viewed as positive because why are interest rates going up at this point? Well, they always go up because of a demand for money. Why is there a demand for money? The perception is this virus thing that is killing or potentially kill the markets is now behind us, and there's going to be a demand for money. So initially, interest rates going up in a scenario like this is a positive, but eventually it will become a negative. Just reading. Now we'll leave this for Dan here. We're saying jobs report added 2.5 million in May. Yeah, so they added more jobs. Okay. Oil up here. Right, everything is happy coming up into the gap fill. Set an alert up there. Gold. Right, makes sense. It's down, but still within this trading range. So really no big deal. Just, I guess, a normal reaction as to what's happening. Gold going in the opposite direction, but no damage really being done here from a longer term bullish perspective. And you've got the transports, which will probably gap up right into this resistance area there. And then we'll see what the reaction is at that point. So, all yours, Dan.
All right, good morning. I just continue to scratch my head at this market strength. It seems like bad news is good news is good news, one of those things. It just will not fall. So Greg says, sell the news. I have no idea. None. But yeah, I mean, I agree that risk is increasing, the momentum is showing people not caring as much. So who knows? But I've been doing a lot of adjustments here. So ask me, I did a lot of Telegram adjustments of selling into strength this morning. So if you are not a paid subscriber, you need to ask me, because there's too many for me to post. But just as a general rule, I'm selling strength this morning, all right? Rick Santoli, I like him. He has quite the personality. And when he was looking at the market move here, he made some, I'm paraphrasing, he made some kind of sentence about stock market versus fundamentals. And he's like, I don't even care about fundamentals. Don't talk to me about it. He says, this is a stock market. This is where the money's going. That's all I care about. That's what he said. And those were different words than I used. I say I'm not a fundamentalist. I scratch my head. I surely do not understand this strength other than the Fed put. That's the only thing I can point it to. But I was out riding my bike, and I was thinking, all right, the Qs are already above. The Qs are over 100% retracement. Although the economy is damaged, unemployment, deficits, bankruptcies, on and on and on and on and on. And that's like me totaling my car, but it being worth the same, because I'm saying, yeah, but I'm going to restore the car and get it fixed and it'll be back to normal. So therefore it's worth the same today. And that's how I kind of look at the market, that people are paying, fundamentalists, the price of a stock is the future discounted earnings. That's the textbook definition. And so they're saying, with our damaged automobile, damaged economy, that's okay. I'll pay you the same that it was worth in January. That's the analogy I was thinking of, and I don't understand it. But that's it. Let's continue. All right, we have a ton of opens. Weekly options trader. AMD, we have a call spread. It's going to expire worthless today. It's the 56s. We're totally fine. BA and spiders are problem children for the call spreads. And Greg, we need to powwow on this more, because that was a power bar. I kind of like the rule, if we're going to fight these things, the hourly, look at that hourly, was a bullish consolidation. Yeah, we got to come up with some concrete rules, not to step in front of a train like that. But we also have a put spread on BA. Costco put spread yesterday, Lyft put spread, MU put spread from yesterday, RCL put spread, UAL put spread. So, we got everything else is bullish. Well, that's not true. Walmart, we have a call spread for next week. Win put spread and we're long. And then Zoom, we have a call spread for today. That looks like that should close out at max profit. ADS, we have a covered call. Azul, long stock. Boeing, we talked about. Gall, long stock. H, we legged into a covered call. Norwegian, we bought stock on the breakout. That looks fantastic. Playa, long stock is a 1, 2, 3. Shack, short naked puts. That looks great. UNH, covered call. And Win, long stock. All right, so those are all the opens. Let's take a look at gappers and other miscellaneous things. All right, glob. Glob down here, 134. All right, bearish gap. Bouncing here right now. I don't know what to do with that. Maybe call spread. 653, another bottoming stock, gapping up, restoration hardware. 271. Wow, here's a look at this thing. Another greater than 100% retracement. Look at this beautiful W bottom. Look, that was nice. There it went up, came down, red bar ignored, green bar, wide green bar. Your entry was over this green bar as a double bottom. Very nice, but nothing to do with it now. I surely would be selling strength. This is same sectors. W whiskey. Remember this thing? Went from 20 bucks to almost 200. Crazy moves. Hey, Joey, your drop down, please. Trump's having a news conference. All right, thanks. I don't like the way this thing trades. I think it had earnings. Work. Things that run into earnings like this, run into earnings, whether it gaps up, flat, or down, I tend to just have a short bias. And it's gapping down, you know, that's also one of those, you know, they've labeled them stay-at-home stocks. SPWH is gapping up, but way too extended for me. Mark, well, ADS, we have a covered call. ADS is not gapping up euphorically, and since we have a covered call, I'm okay with that. Gall, I would sell some and move the stop to yesterday's low. That's what I did. Win. Yes, let's sell half a win right here. Wait, I lost my alert, darn it. Right here, look, it's a topping tail. 102.20, yeah, sell half a win right here. Yep, I like him. Yep, we nailed that one. We did very well with bottom fishing in these beat up sectors, restaurants, airlines, cruise ships, hospitality, SAIC gapping down. Could be a call spread candidate. Papa Delta earnings, no great pattern. Daku flat had earnings. CZZ, no volume. I can't tell where you're gapping. NMRK, Steve. Yeah, it's fine as posted. Cool. Wow, the cool ugly gap 297. Call spread candidate. Qs here. What is going on with the Qs? I saw this topping tail. I saw this topping tail and assumed it was a bad tick. This is not even trading over yesterday's high now? Wow.
No, it's not.
Wow, I thought that was a bad tick until I saw this red real body now. Ed, yeah, we're removing the stops. Yes, that's our rule. When Ed, that's just a textbook rule of ours. Gaps over, under a stop, 30 minutes, and then we will, you know, assess within the 30 minutes. All right, next and I don't like the way you trade, light volume, you're gone. TIFCO, nope, pattern. TIFF had earnings. Nice wide range bar, but no pattern. I know they're still in talks with Louis Vuitton about if they're going to get married together or not. No pattern on YEX, had earnings. NX gapping up here, earnings, but now it's far from the 20. Zoom Z, strong, but not chasing. MTN, up 4 bars at the 200. That's bearish gap. You know, it's climactic on the weekly. You can keep an eye on that on a bounce to maybe a day trade short and or a bear call credit spread. GPS, that's, you know, so many things are going to be extended now. There's not going to be no-brainer entries here. On Domo, it's extended, but I like that it's gapping over this red bar. Oh, look at our little rad upper right. We didn't get filled on the put spread, but I did some naked, and some of you took a lesser credit, and some of you are directional. But rad looks good. That looks good. CAL, 2 extended, that had earnings. Abco had earnings. 2 extended, weekly resistance. Whoa, Zoom's getting whacked nicely. Remember, Greg, we were thinking of doing a call spread for next week also. Looks nice. All right, Jets, in our ETF trader, I sent out an alert saying sell the opening prints. Up 8 bars, far from the 20. We're up huge. That's just the proper thing to do. I mean, there's had a crazy run on these airlines. I said the same with SMH, sell the opening print. Sell to close, not sell to be bearish, sell to open. All right, our Boeing, you need to come in. Cake, I'd be selling. DRI, nice, they up. I think Alex was in that yesterday, very nice. Chef, I said I liked today over yesterday's high, but the gap's messing it up. Hey, Walmart, nice. We have a call spread on that, relative weakness. Nice. Dollar Tree, that was a call spread idea. This was on my long list, AGNC, wide range bar from consolidation. I'm not chasing the gap though. Not with big old gaps. This NMRK, the gaps. Our rule is to buy a 5-minute high, but now a 5-minute high is going to be 45 cents higher. Nice rad is cranking.